Thank you for joining me on this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you understand the level of risk in the stock market through our proprietary market risk signals that are emailed to you every weekend in our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Thursday, May 28th, 2020. For this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. Today we were down 0.21%, so 21 basis points on the S&P 500, and closed at 3029.73. The first chart that we're going to look at is a one-day, one-minute chart of the S&P 500. So each candlestick represents 1 minute of trading. The dotted blue line is where we closed yesterday, and what we can see here is we gapped up slightly at the open, went negative for just a couple of minutes, and then we had a pretty decent day going on up until about 1:45 in the afternoon, and we started to sell off, and as we can see here, closed near the lows of the session and closed negative 21 basis points for the day. The next chart that we're going to look at is a 10-day, 10-minute chart of the S&P 500. Let's start over on the left-hand side here, and what we can see is where we gapped up last Monday and pretty much just traded sideways for the balance of last week. And then on Tuesday, of course, the market was closed on Monday for Memorial Day. On Tuesday, we gapped up at the open and closed at the lows of the session. We had a very similar price action yesterday morning where we gapped up at the open and then sold off, and then just before 11 o'clock started this rally that held up until about 1:45 this afternoon. And you can see we had this really nice trend going in on these 10-minute candles, really held that trend line quite nicely, but broke that just before 2 o'clock this afternoon and went from a decent positive in the day to a negative for the day. So we definitely broke this uptrend. The question is this a one-day event or will this continue? And we'll talk about that in the next chart. The blue line here is 3,000 on the S&P 500. And of course, even with today's action, we now have 2 days in a row where we've closed above 3,000 on the S&P 500. The next chart that we're going to look at is a 20-day, 30-minute chart of the S&P 500. So each candlestick represents 30 minutes of trading. And what we can see here is from May 14th, where we hit our intraday low right around that 27.66 mark, until today, where we hit our intraday high right at 30.67. We went up 301 points in 10 trading sessions, okay? So 10 trading sessions, 301 points, that's 10.88%, guys, that we went from right here to right here. That was a 10.88% movement in the S&P 500 in just 10 trading sessions. That is a huge movement in a very short period of time. And as we can see from today's trading action, today was definitely a reversal day in the market. The question is it a one-off event? Will we get back right on trend tomorrow, or do we need to take a break here? It looks to me, based on volume action and price action, that this market needs to take a breather and pull back. So let's do some Fibonacci retracements here just on this move that we've had over the last 10 days. Let's just have a little fun with this really quick. And let's get an idea if we're going to pull back here. Let's get some realistic expectations set as to how far we might pull back using Fibonacci retracements on the last 10 days. So with the Fibonacci retracements set in place here from the lows that we hit on May 14th to today's highs, if we are pulling back here, if we pull back 38.2% of this move, that would take us down to approximately 29.53, 29.54. Now, we know we have some support and resistance that we were hitting right around this 29.60 area. So if 3,000 and if the 200-day moving average, which we'll look at here on the next chart, but if this level does not hold, then it would make sense for us to pull back to somewhere around this 29.53 to 29.60 level on the S&P 500, which we know has some support and resistance, not a lot, but at least a few days of trading right there. as well as that represents the 38.2% retracement of the last 10 days of trading. The next chart that we're looking at is the year-to-date chart of the S&P 500. Each candlestick represents 1 day of trading. The orange line is the 200-day moving average. And as we can see here, we have now had 2 days where we've closed above 3,000 and above the 200-day moving average. But we know from looking at the last chart that we've come a long way in a very short period of time. The market is probably overextended, at least in the short term here. And the question now becomes, can we stay above the 200? Can we stay above the 3,000 level on the S&P 500? Or will we pull back to at least the 2960 level or even lower? Nobody knows the answer to that. We will just have to keep our eyes on the charts, of course, for the answer. The next chart that we're looking at is a 3.5-year chart of the S&P 500, where each candlestick represents 1 week of trading. And what we know is that up until this week, we've only had, in the history of the S&P 500, we've only had 21 weeks where we've been able to close above 3,000. So we'll have to see tomorrow, right, based on tomorrow's close, Friday's close, the 29th, we'll have to see if we can do it for the 22nd time in the history of the S&P 500. And remember, the last 21 times that we've closed on a weekly basis above the 3,000 level on the S&P 500, we've done it with a lot higher earnings on the S&P 500, a lot better economy, and a lot less global uncertainty. Okay, a quick refresher on the Simple Market Signals weekly signals and how they can help you. The signals are green, yellow, and red. The green signal is the best risk-reward ratio for equity investors, and what you're going to find is that the stock market makes most of its upward progress when the signal is green, okay? The worst risk-reward ratio signal for equity investors is when the signal is red, and what you're going to find is that bear markets and the worst downturns in the stock market happen when the signal is red, like during the 07 through 09 bear market, as we see here. So again, the best risk-reward ratio signal for equity investors is when the signal is green, and the worst risk-reward signal for equity investors is when the signal is red. Thank you for watching this video. Before you leave, don't forget to subscribe to this channel. Please give me a thumbs up on this video and check out some of my other videos. I have a lot of great educational videos on this channel. And if you are a financial advisor or an individual investor that manages any of your own money, including in your 401k, 403b, your IRAs, or of course your trading account, I would encourage you to take a serious look at Simple Market Signals, which is my personal risk management model that I have now made available to the public. For those of you who would like to learn more about how Simple Market Signals can help you in both up and down markets, here's some additional information. As part of the Simple Market Signals model, there are 3 powerful indicators. There's the Simple Market Signals proprietary risk level signal. There's the short-term trend indicator, which helps clarify short-term moves in the overall U.S. stock market. And a normal signal length for the short-term trend indicator is anywhere from 1 or 2 days to 7+ weeks. Then there's the general trend indicator, which is designed to stay positive during the bulk of most uptrends and negative during the bulk of most downtrends. And a normal signal length for the general trend indicator is anywhere from 2 weeks to 5+ months. We disseminate the information through the Simple Market Signals weekly newsletter. In the weekly newsletter, you will receive the proprietary risk level signal on the overall U.S. stock market. You will also receive the proprietary risk level signal on all 11 major sectors of the S&P 500. You will also receive the short-term trend indicator signal. You will also receive the general trend indicator signal. You will also receive market and sector performance information over multiple time frames. You will receive a recap of what happened in the stock market for the past week. You'll also receive technical analysis information, fundamental analysis information, and yield curve information. There is a ton of information every week in this Simple Market Signals newsletter. And a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents per day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. And guys, I want to set realistic expectations here, okay? The newsletter isn't fancy. It's effective. It's plain text, no color, no fluff. And please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, that is just due to international compliance regulations. Now let's recap what you will get with your Simple Market Signals subscription. You will get the weekly emailed newsletter with all of the contents we just talked about. You will also receive special midweek updates when warranted. So if there's a major signal or direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to get that information to you as soon as possible via a special midweek update email. The best fit for a Simple Market Signals subscriber is an investor or trader with at least a 6 to 8 week plus time frame that they're focusing on. If you're a day trader or a really short-term trader, Simple Market Signals may help you a little bit, but the reality is Simple Market Signals is designed for those investors and traders with at least a 6 to 8 week plus time frame that they're focusing on. And if you would like even more information about how you can benefit from Simple Market Signals, I have the following videos that will be linked in the description box below this video. And to subscribe to Simple Market Signals, you just need to go to the website that you see on the screen here. That's https://simplemarketsignals.com. It'll take you about 4 minutes to subscribe. It's that easy.